Hey guys, welcome back. Thank you so much for being here. Today we have a good one in store for you. I'm going to be talking a little bit about analysis paralysis, a little bit about this trade I took, and a little bit about TopstepX. Yes, I took a trade this morning on TopstepX, and I'll be kind of going over the platform a little bit. I have yet to do that. Essentially, I got in the trade, tried to place a stop, and then my trade was canceled, and I was like, what the heck? Tried again, it was canceled again, and then I figured it out. You actually have to place a stop market, and I'll show you what I mean. But I'm going to save that towards the end because today I want to talk a little bit about analysis paralysis and kind of just like how to decipher where the market's going to go, what PD arrays to use, and talk a little bit about my struggle this morning. So let's get started. It's going to be a good one, and I hope you all love it. So we're going to start on the daily time frame. Perfect. So yesterday we traded into all-time highs again, which is to be expected because on Friday we had like this wick down into this daily fair value gap here. And honestly, we wanted to see the market continue higher on Monday. I wasn't expecting it to continue right away. We haven't even traded below Sunday's open yet. So that's something to keep in mind potentially for tomorrow with FOMC news. But we did trade higher on Monday, taking out last week's high, which would have been the all-time highs. And then Tuesday, we were kind of expecting maybe for it to move higher. But so far, Tuesday's just kind of been like an inside day. We'll see what happens in the afternoon. But so far, we have just been trading inside of Monday's range. So another thing we can do is kind of measure out this range, see where the halfway point is, and then get into a buy in the discount, which is kind of what we did here, and I'll explain it to you further. So let's drop down to the 1 hour time frame. Okay, so we're on the 1 hour time frame now. Essentially what I was looking at was these London highs and then these relative equal lows down here for potential draw on liquidity. Now, we also have two draws on liquidity, one being relative equal highs up here, and then one being relative equal lows. So how do you decide which one to go for? Well, one of my decision makers was, of course, this 1 hour order block here. I wanted to see if the market would respect it and move higher, or if we would disrespect it and then continue lower. But we are also trading off of that daily fair value gap that we traded down to on Friday. So, and we can see the market moved higher off of that. So if we're looking for somewhat of a retracement move down into this 1 hour order block and then wanting to see the market move higher, that is one of my scenarios. Another scenario would have been to see in this market close inside the 1 hour order block, potentially even go down into the consequent encroachment of that area, and then I'd want to see it move lower. But the fact is we actually had this really nice reaction off of that 1 hour order block, and seeing that gave me indication that we would want to move higher. Now, before I go a little bit further, as you guys know, I've been trying to trade before 10 a.m., potentially grabbing that 950 to 1010 macro, even the 920 to 940 macro, and then even the 850 to 910 macro. These are the three macros I've been trying to trade along with the 10 to 11 silver bullet time frame. However, where I'm at is 2 hours behind New York time. So for me to catch that 850 macro, I have to be on the charts at 6:30 a.m. and honestly, sometimes that just doesn't work out. So I like to be on the charts by 7 a.m., which is of course 9, so I would have already missed that macro. And yeah, and then again, I don't really like trading the 920 to 940 macro just because the opening range, the opening bell is in between those times, and I've seen in the past how fast it can be. Like as soon as we open, it could go higher and lower really fast. So it really depends, but I do like to be on the charts for that. And then that helps me kind of decipher what we'll do next and potentially catch the 950 macro. So I've been kind of just like watching the market and seeing how we move during these macros. And I think even just like knowing how we moved during those macros has helped me determine where we're gonna go and what I want to see. So essentially, we came down into this 1 hour order block around 9:30. It was actually like 9:20 we came down into this order block. So again, I wanted to see like how the market was going to react, if we were going to move lower, if we were going to move higher, kind of waiting for this 1 hour candle to close, which would lead us to 10 o'clock. So I'm going to drop down to the 15-minute, and then I'm going to kind of change my layout, and then you guys will see like the 3 quadrants. All right, again, so we had that 15-minute time frame now. We traded down into that 1 hour order block right at 9:15, came back down into it at 9:30, and then traded off of it one more time at 9:45. So here's where we talk about analysis paralysis. Yes. On the 15-minute time frame, I was watching both of these higher time frame macros. Essentially, we had that higher time frame 1 hour order block, but I also found this 15-minute fair value gap that we can see the market was respecting. We weren't closing above it, and we were kind of just like trading inside of this 15-minute fair value gap. So seeing both of these higher time frame PD arrays, essentially I just waited. I just wanted to see how the market was going to move. I didn't want to get into buy too soon because I didn't want to see the market close below this 15-minute fair value gap. We in fact did not the next candle here, but then we're already kind of like higher, right? We're already past halfway of this range, and I did want to get into discounts. So sometimes the analysis paralysis can get in the way. Essentially, I could have just looked at the 1 hour order block and decided to not watch this 15-minute fair value gap. Instead, use it more as a confirmation, like, hey, we do see that this is going to be like a little bit of a stop for the market. Like we're going to be kind of trading inside this range, but we didn't have to use it this morning. We could have just said like, hey, we understand that there might be some consolidation in this 15-minute fair value gap, but ultimately we're looking for those London highs to be reached. However, this morning I was just kind of waiting in that range, the 1 hour order block and then the 15-minute fair value gap. So we didn't get into a trade down here, but our trade actually ended up being up here, kind of reaching for those London highs. So let's drop down to the, we're gonna switch over now into the 3 quadrants here. Perfect. And I'll kind of talk a little bit about where my trade was and why I like that trade. So up here we have the 15-minute time frame. Down here we have the 5-minute time frame, and then here we have the 1 minute. So I'm going to talk a little bit on the 1 minute for now, kind of showing you guys the macros that I saw. So here we have the 850 to 910 macro. We actually traded up into these OTE levels from this swing projection. We could have taken a trade here using this order block / OTE levels, or we could have waited simply for this kind of inversion fair value gap to close below and enter in here. That would have been our 850 to 910 macro coming down. Of course, I was sleeping, so I didn't catch that one. Again here though, with the 910, we see that the market does move lower into that 1 hour order block. And then this morning from the 920 to 940 macro, we see we do have that trade down here. We could have taken a buy off that 1 hour order block and then move up into that 15-minute fair value gap. That could have been a nice little run there. We did in fact have a deep retracement, but we never took out that low. Seeing that, I was kind of looking and kind of wanted to see the market continue higher since we didn't take out that low. Then after the market did in fact break market structure here with this break of high, I was watching this 1 minute fair value gap to see if we would respect it and continue higher. We also do have a little bit of an OTE happening here. We did come down into that 50%. The cool thing about this 1 minute fair value gap is we never closed below it. We can see the candles. They did wick below it a little bit, but we never actually closed below the 1 minute fair value gap. So watching this 1 minute fair value gap, we also had the confluence of this 5 minute kind of order block down here. And as you know, one of my favorite setups is a 1 minute fair value gap with a 5 minute order block. We did in fact trade down into that 5 minute order block right here. And then we kind of see the market kind of just consolidating more or less. And this is where the analysis paralysis really got me, because again, I was like, I didn't want to see this 15-minute fair value gap respected. However, we could have completely got into a trade down here on this 1 minute fair value gap. So we could have completely entered here because it had our 1 minute fair value gap aligned with our 5 minute order block. And then our draw on liquidity was of course the London highs, right? So this would have been a perfectly fine trade to take. However, the analysis paralysis got me, and the fact that we were waiting for this 15-minute fair value gap to either close above or see a respect of it and move lower kind of had us a little bit stumped this morning. So you can see it up here, right? We were still not closing above it. We were just wicking above it, and that kind of stopped us from getting into this trade. So yes. But that didn't stop us from trading. As long as our draw on liquidity was not reached, we still have opportunity to trade. And I think that's something I've learned trading over the years is as long as our draw on liquidity has yet to be reached, we can still take trades. They might not be as good as the initial entry, but we don't need to stress about not getting that perfect setup, right? So then we actually did trade higher and of course closed above that 15-minute fair value gap, moving higher. And then this is where my entry was. So we had this kind of 1 minute fair value gap here, but it was also aligned with this 5 minute fair value gap right here. And since the London highs were not reached and we wanted to see the market reach those London highs because they're very equal, very easy target to be met, we waited for our setup to come to fruition. And along with that, we were looking for the 1050 to 1110 macro. I placed my stops just above that 5 minute candle, so right here. And then of course our target was the London highs up here. So even though we didn't get that perfect entry, we still managed to grab a couple points and we're able to still take a decent setup. So with this 1 minute fair value gap, and then of course we took out that sell side liquidity here, traded down into that 1 minute fair value gap, aligned with the 5 minute fair value gap and into the London highs. Perfect. Now we're gonna move over to TopstepX and I'll kind of explain what happened this morning when I took a trade and essentially how it ended up closing my positions. So let's jump over to TopstepX now. All right, we're on TopstepX. So as you guys know, I've been trading the minis just to kind of get my confidence back. And essentially I've started to trade multiple contracts. It's not just the one in queue, it's like 2 to 4 minis. This way I could take profits at certain objectives reached and then let a runner play out. So I've kind of been liking the minis and I find it's just easier to get in. So, you know, we're not risking that much and I've been able to enter into my trades. However, this morning we got into the market. I like placing limit orders. I'm not a market order kind of person. I just like my limit orders. This way I get the best fill, and then I'm in the trade no matter what, right? Like this kind of takes the pressure off of hitting the button, because if I place a limit, it'll come down into my order and then we can be in the trade. So that did in fact happen. I had a limit down here. We traded down into it, and then the market started to move higher. But I was trying to place my stop, and most of the time, order limit right here, see how it says limit? Most of the time you can put a limit order for a stop loss as well. However, when I did it, it entered into the trade right away, and I was like, no, like that's not what I wanted. So then I closed them all, tried again, entered into the trade, tried to place a limit, and then it did it again, and I was like, no. So then actually what you have to do on TopstepX to place a stop is you have to place a stop market, which is essentially the same as a stop limit. However, they just called it a market for some reason. So when you put a stop market and then you put your stop price, it'll create that line there, and you'll be okay. Like it'll actually work. So if you guys are trading the TopstepX platform, don't forget to put stop market before you place your stop loss, because if you do a limit, it will just enter into the trade for some reason, and that's not what we want. So yes, that's kind of what I learned today. Again, the analysis paralysis, and just kind of watching the market to see where we want to go. Again, I could have had a really beautiful entry in the morning, but the fact is we didn't get in because of that 15-minute fair value gap, but we were still able to catch 20 points to reach for those London highs. So, you know, you win some, you lose some, we learn some, that's all that matters. So I hope you guys loved this video. Let me know in the comments if you're using TopstepX. Let me know in the comments if you took a trade today. I'd love to hear your thoughts, and I love connecting. So let me know, and this one's for you guys. Cheers. I will see you again this week. I'm gonna try to post 2 more videos. So tomorrow we'll probably post a video late afternoon, because we're gonna try to trade the afternoon session after FOMC. And then Thursday and Friday I feel like are gonna be the best days to trade, because there is news those days and should be better runs. So we'll see. But for now, thank you guys so much for being here, and I will see you all in the next one. Bye, guys.